Hey everyone. So one of the main things we look at when we qualify you for a loan is your credit. And a lot of people in the past have run into some trouble in their credit and need to do some work. So I wanted to share these quick tips on helping repair your credit. There is no one tip that's going to fix everything. So you got to kind of do it all and stay on top of things. So first thing would be stay on top of your credit score and report. You could do that. The government allows you to request one report each year from each bureau. One cool way to do that is set an alarm on your phone or whatever every 4 months. Request one of them, so you at least have, TransUnion, Equifax, or Experian. You have one of those currently every 4 months. Keep in mind those free ones do not have a score. They're just going to show you all your history. So they're helpful, but they're not necessarily going to give you a score. Things like Credit Karma are somewhat helpful to keep track of things, but they're not going to be accurate. It's not a FICO score, so it's not the best thing to pay attention to. Next thing, number two, fix any errors in your report. So if you see anything wrong on your report, fix it immediately. If something's showing a late payment, whatever it may be, reach out and fix it. One thing about disputes, if you do put a dispute in and it doesn't go in your favor and you have to remove it later, sometimes that could have a negative effect on your score. So if you're going to dispute, do it when you know you're in the right. Number three, be sure to always pay your bills on time. So again, that's pretty self-explanatory. Don't fall behind, make your bill payments on time. Late payments are bad for your credit. Keep your credit usage under 30%. That's the old adage, always stay under 30%. And that's true. They kind of look at all your usage. So if you have $10,000 worth of credit and you're using $3,000 or less, you'd be under your 30% utilization. Ideally, though, the credit bureaus, your score will go up higher the lower that is. So just being under 30 is not the magic, but you go down to, they want you some credit, but not a lot. Next, pay down other outstanding debts. Paying down your debts, they're going to be looking at your utilization ratio. So by paying down debts, you're going to make that ratio better, and overall, everything's going to look better. Don't close out old paid off credit accounts. This is an important one. A lot of people, when you pay something off, they pay it off completely and close it. But one of the main things all these bureaus look at is the length of your credit history. So if you close an account that you've had open for 7 years, even if you're paying it off, that's going to have a negative effect on your account. So instead of paying it off completely and closing it off, pay it down really low. Leave $5 on there and leave it open. And then that way you keep that length of history going. And then last one, don't or avoid applying for new lines of credit. That, again, self-explanatory. They don't want to see you applying for tons of credit cards, tons of different loan types. Inquiries are bad for your credit. So as long as you keep your inquiries at a normal pace, then you should be okay. But any new lines of credit can not only affect your credit, but they could mess up with me if you're in the loan process as far as your debt to income. So I thought those were all good tips. And then, here at Mann Mortgage, we have access to some pretty cool credit tool as well. So, if you are in that kind of situation, reach out and I'd be more than happy to take a look and see, what we can do with your credit, what a good plan would be to get to you where you need to be. Have a great day, everybody.